Speaking of things that might need a better market structure, let's talk about MicroStrategy. Um, People have been describing this jokingly as Saylor's three body problem. And what's going on is that for the first time since 2022, and yes, that is correct for all of you who said Strategy sold Bitcoin for the first time ever, you were wrong. They did this before. But for the first time since 2022, Strategy started selling some Bitcoin. They sold 32 BTC, largely as what looks like mostly a test transaction, because that's $2.5 million per their 8K to fund distributions on preferred stock. Now, that is less than 0.01% of their holdings, but they chose to sell some BTC rather than drawing the cash reserve. And they sold as Bitcoin fell under 72K on the news. Why is this happening? So their capital stack, I will remind everybody, has equity. It then has preferreds, which are the STRCs of the world, that right now, round numbers, seems like they need about $1.5 billion a year in dividends. They have $900 million of cash, and the MNAV is basically at parity. So that's not really a good vehicle for issuing more to make the gains work. Saylor is saying that our goal is to make STRC the best credit instrument in the world. He called the sale, quote, Rom, a big nothing burger. However,
you listen to the show, Michael, you should come on and join us.
There you go. Now let's talk about the bears on the other side of this, though, who are saying maybe it is a problem. So Jeff Dorman was saying 15 billion in prefs have a 1.5 billion a year dividend. He raised 2 billion via stock, then used a bunch of it to buy back 2029 maturity bonds. Someone is going to lose badly here, and it will happen in the next 4 months. Rich Galvin said that Saylor faces a three-body problem. He can't indefinitely support all of equity, Bitcoin, and the preferred debt stack. Eventually, they fly too close to the sun. So I'm curious, let's start with the capital stack component of this. Do you agree with Dorman's point that now we're in a world where Bitcoin prices are not shooting upward? We have differential interests between equity holders, Bitcoin holders, and the preferred holders. Like, is that conflict real?
I'll launch in there and say, you have a three-body problem. I think he's right. Unless Bitcoin is coded to go up in perpetuity, which a lot of investors in that believe, and so they dismiss this issue. If, however, that does not happen, then you have issues like this. And one of the challenges is that a lot of investors are in Bitcoin because of the velocity. It is an attention asset. I coined that term a few years ago, seeing more of that being used. But here's the issue. There are a lot of assets competing for attention now. Many assets are competing for attention. AI is an example of that. A lot of things are going up and to the right now too. Biotech is going up and to the right. So that makes it harder. That makes it harder for digital assets. When you're in a momentum market, and this is a momentum market, we're 2 standard deviations into a momentum market, and you have an asset that's supposed to have momentum and velocity, and it's not running fast, then it cuts against you. That's what we're seeing now. So this is not good when you sell, even if it's a small number, it doesn't matter. Perception's reality. It's an attention asset. It's not about the 0.1%.
Yeah, it's a social consensus asset. And one of the largest evangelists of that thesis just sold his assets for the first time. Now, a couple things. First off, he's a DAT, and he's acting like a DAT because a DAT has to act in the interest of its shareholders. And, by selling, most DATs will tell you that they don't like it. They'll grind their teeth, but the right thing for them to do is to sell their underlying tokens when certain conditions are met. And I wouldn't say this was necessarily a sale. It was symbolic to say, look, I'm a DAT. I need to do certain things to optimize my capital stack. This is a source of funding when I need it. Maybe it's a quest for him to lower his cost basis because he's provided a degree of centralization into an asset that should be totally decentralized. And so by impacting the narrative, by impacting, this theme of social consensus, you would expect for the price to go lower. So maybe he's, maybe that's fine. Maybe he has some ideas about when he's going to go long again, and obviously he would never be manipulating markets, but maybe this is going to be an opportunity for him to lower his cost basis in time. The other thing that's challenging with Bitcoin, and Ethereum is a little bit different. Other assets, Solana, and other assets are different, a little different. Bitcoin is an inert asset. It is not a yielding asset. And so when you start offering to investors a yield on an underlying asset that does not yield, it's hard. And so that's another conundrum that people need to think about. Now, is selling that asset a way to generate that yield that you're promising? It's one of many. Can you hit the ATM if you have a positive MNAV? Yeah, that's another way. So but that underlying conundrum does result in some challenges when you have
100%.
right.
It's a
You have-
variation
yeah,
of asset liability mismatch, right?
yeah, yeah.
Like a coupon mismatch.
100%. Whereas, like for some of the yielding products, at least you have that organic yield, where maybe it's easier to structure cash flows or payments, and maybe you have that dollar crypto mismatch, but you're getting a 2.8, 2.7% yield on ETH as an example, like Solana, Avalanche, Hyperliquid, you name it. I don't want to get anyone mad at me if I forget the name of their ecosystem, but it's just a fundamental mismatch in Bitcoin that you don't have in other places. Now, those who can successfully drive sustainable yield on Bitcoin, that's very powerful. Like, and how many strategies I've seen where people have been trying to generate yield on gold? Not easy to do. It's a very similar type of strategy, but the extent someone can deliver, and this is what he's trying to do, deliver a scalable yielding Bitcoin exposure, I think there's going to be demand for something like that for a long time.
I think the hard part is the mechanics of the yield, though, right? Because if you look at STRC, you have an asset that needs to be paying an 11.5% dividend by buying Bitcoin. So, like, the math on that is actually very simple. And to the point Ram was making earlier, it's that if I raise $15 billion of it and I just hold the Bitcoin, if that doesn't go up by 11.5% per year, if I start selling it back, I'm just reducing the amount of Bitcoin that I have, period, full stop. And so fundamentally, what you're ultimately asking there is the price of Bitcoin going to go up more than 11.5% per year? And part of what's interesting about this as well is as Bitcoin has gotten larger and larger over time as a market cap asset, just as one would expect, you're seeing a reduction in the rate of gains, right? Back to the law of large numbers problem. It's a lot easier to get a 100 bagger with a $10 million asset than with a $1 trillion asset. Mm-hmm. And so I think a lot of the people who have been parameterizing this based on historical Bitcoin performance have not normalized that for the current size of Bitcoin. I just wonder, like, if we're not staring down the barrel of very significant inflation, like, what is the game plan to continue paying that dividend and not sort of stripping Bitcoin off the balance sheet over time?
Yeah.
Go
ahead,
both
Ron.
are selling below par now, STRC and STRF, and they sold off today. That's not good to see. Now, if you're selling Bitcoin to generate cash, the idea would be to create confidence for the providers of your debt financing. So one would expect that these would close closer to par, but they did not. So if those assets sold off, that means the cost of financing actually went higher. Kristen also knows what that means. That's not good.
Yes.
That's not good. So like if you're at a bank, right? What's a good analogy here, Austin?
I would say a good analogy for a bank is that you have a bunch of loans on the balance sheet that are paying you 6%, and you've watched short-term rates doing this inexorably while you're still getting paid 6%. There comes a point where if rates go up enough, you just die. And if you don't believe me, the name of that bank was Silicon Valley Bank. Like, this has happened in the not too distant past. You have an asset liability mismatch.
Yep. The other issue we have time and time again in our industry is this the arbitrage between equity and token. where it's hard to buy a token. It's hard for people to buy a token. And so they go in through an asset class that's easy, a trust, an equity, and that works sometimes when there's more demand. But when there's less demand, maybe it can be sold faster as well. So it works in both directions. It's been it's that basis. In last cycle was one of the core challenges with with the bear market that we entered with that basis between equity and token. A lot of people died on that hill. You can go through some of the names, but yeah, interesting times. Interesting times.
It adds pro-cyclicality to Bitcoin,
Yeah.
too, right? Like MicroStrategy was a bid for Bitcoin. Now they got to sell Bitcoin to fund the obligations on Bitcoin.
So this is the first time we've seen in a really long time where people are saying, "Uh-oh, strategy is sold some Bitcoin," and then you're seeing some some incredible momentum amongst a handful of names in the alt space. And so I don't think it's time for me to say, hey guys, it's alt season again, giddy up, let's go. But it's what we've been talking about. It's those alts are getting looked at now through new, more sophisticated eyes, I think, where the alts with fundamentals are outperforming those that are not. It feels like a fundamental season, if you will, an alt fundamental season. But we're starting to see excitement. We're starting to see, maybe a little bit less focus on this Bitcoin has been very, very dominant in our last cycle, massively dominant. It is the largest asset class of the largest of the tokens across the asset. You can't ignore it. But for the first time, it feels like you're seeing some very, very strong momentum within a handful of projects that are out eclipsing. They're eclipsing Bitcoin for the first time I've seen in a while.
Heads up, everyone. We'll now be fully transitioning Bits and Bips to its new dedicated Bits and Bips channels starting next week. So if you're not yet subscribed to the Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, then go there now and subscribe. After that transition, for a few weeks, we'll play segments of the full interviews on Unchained as a reminder, but head there now and subscribe so you don't miss an episode. You can get links to all of the platforms on unchainedcrypto.com/bits and bips. Again, that's unchainedcrypto.com/bits and bips, spelled BIPS.